Hi, people from Facebook and YouTube. My name is Varela. I'm here today with Johana and Michael Butcher from Fairway. They're gonna answer some questions about credit, and here they are.
Hi,
Hi,
Jesse.
Jesse.
Hello.
Thanks very much.
Hi, everybody.
Hello.
Okay, so the first question is, what is credit score?
Credit score, great question. So credit score is a number, typically between 350 and 850, that reflects your credit profile. A lot of people think that a credit score may just reflect things like late payments, for instance. And while late payments are important in determining a credit scores are typically made up of up to 40 different factors. Things like how much credit you have and the type of credit you have and a number of other things that go into the credit score. So credit scores are typically generated by three different credit agencies. So if you've heard of Equifax and TransUnion and Experian, those are the three major credit companies out there that are doing credit scores. And anything from your credit card to your car loan to your mortgage, they are tapping into these companies to get the credit score to determine how risky of an investment you are. That's what that all comes down to.
I think it is important to bring up to the fact that depending on what kind of credit you're applying for, your FICO score might be different. So, when you're applying for an auto loan or for a credit card and for a mortgage, it is different because the credit bureaus use different algorithms to calculate your FICO for that industry. So that's really important to keep in mind. Some people check, they use the FICOs that they get on their credit card statements and they think that is their FICO, and that is for the credit card industry, but not for all the industries.
And just to clarify, FICO is a technical term for credit score. Fair Isaac and Company.
Yeah,
So,
there you go.
Yeah.
So, what is the best way to improve the credit? A car or a credit card or?
That is the question.
Best
That's the best question. Yeah, we love that question because there is a lot of misinformation out there, unfortunately. And one of these pieces is that you need to get a big piece of credit or a lot of credit to have a good credit score, and that is absolutely not true. Do not be swayed by these things about getting a car is the best way to create a good credit score. That is not true.
It's the worst way to
Yes.
build credit if you want to buy a house.
The single best way to generate a credit score and a good one is to simply have a credit card or two and to keep the balances under 30% of your high credit limit. That is the
And I think
formula.
it is important to bring up for people that don't have any credit. Just get one secure card with the bank you already bank with and use it as a tool to create good credit. So if you can actually just use it for just go put gas and then you pay it off when you get your statement, that will be ideal. So
Where can they get those secure credits?
Again, the secure credit cards are usually offered by the banks, people bank with.
Any banks?
Yeah, pretty
Most
much.
banks.
Yeah,
Most banks will offer a
banks
secured credit
yeah.
card. And what it is you're securing it against your own funds.
Yeah.
So if you're just establishing credit or if you're reestablishing credit, maybe there were some issues in the past, secured credit card is a phenomenal way to do either one of those things. And it's just simply putting a $300 deposit down typically. And then the bank or institution will issue a credit card against that $300. And then you can treat it like a revolving credit account. And the key is to use no more than 30%. Ideally, 10% of the balance would be better, but we understand if you've got to use it, that's fine. But 30% of the balance is what you really want to keep it under.
The other question is, what is the minimum credit score to buy a house?
That's a great question. So the agencies, when I say agencies, FHA, government loans, Fannie Mae, Freddie Mac, which would be conventional loans, they all have different thresholds, credit thresholds. For FHA, it's a little bit lower because they offer more flexibility. So The agencies say down to 580, a score of 580, and for instance, Fairway on a case by case will go down to 580. But that typically means a lot of collections and judgments, things like that. And so sometimes it's a matter of just rolling up your sleeves and doing a little work to clean it up. But ideally, you want a credit score of at least 600. And then if you're looking for down payment assistance, you want a score of at least 620 or higher.
620. Okay.
Mm-hmm.
Now, it is important to keep in mind that when you're applying for assistance programs right now, like the minimum FICO is 620, but usually because of the FICO, you're gonna require some reserves. So reserves are money that we need to verify you have in case of an emergency after you close, but it's just verify it and we don't use it. But that is good to keep in mind.
How much is around for the reserves?
It depends on how much your monthly payment is going to
Well,
be.
and the amount of reserves depends upon a lot of times your credit score. So the lower your credit score, the bigger risk you are considered to be for the investor, the more money they want to see in the bank after closing. The magic number tends to be 680 or higher if you're doing down payment assistance to have little to no reserves in the bank.
Yeah.
Okay. Mm-hmm. So the next one is how much time will it take me to have enough credit to buy a house? Like if I don't have any credit, how much months or years do I have to wait if I do everything right?
Yeah, so let's take that example. Somebody doesn't have any traditional credit, no credit cards, no car payments, anything of that nature. Opening a secured credit card will result in credit scores after your sixth payment.
Yeah.
Your sixth payment will generate a credit score.
Perfect.
Mm-hmm.
Okay, next question. I had a foreclosure in the past. How this affects my credit?
You want to answer or do you want to?
Yeah, no.
Okay.
You're on a roll.
I'm on a roll. So foreclosures, thankfully, do not affect you for as long as people typically think that they do. So FHA, again, a government agency that insures mortgages, gives a lot of flexibility in this respect. And once you have established 3 years from the date of the public trustee's deed, that's the technical term for when the property turned back over to the bank, then you are allowed to do another home loan with FHA, and you can do it with minimum down. So 3 years.
Yeah, and if they're not sure on when this happened, they can just contact us, and we can check when.
Case by case.
Yeah, it's just kind of give them, the exact date they will be eligible to buy again. So that's good.
Okay, next question. I used to have credit cards that I didn't pay. Can you help me fix my bad credit?
Credit cards didn't pay. So here's the thing. I always tell clients that time and money fixes everything, of course. Time is going to be the biggest thing to fix late payments. There's really not a way to quote unquote fix a late payment except to just put a lot of time distance between yourself and that late payment. The magic number is typically 12 months. Credit scores will start rapidly getting better after you have at least 12 months from the date of your last late payment. But lates are lates, and they're really hard to fix with banks as opposed to collections, some other types of things like that, which can be negotiated and potentially paid off and removed from your credit.
And it's also good to keep in mind that, it depends on how you manage the credit card and your credit in general after that late payment. So let's say you have a late payment, but then after that you maxed out that credit card anyways, that's not going to help you even if you're making the payment on time. So it is good to make a good balance, make the payment on time, and also try to keep a low balance so that way it, like you show that you learn your lesson kind of a thing. So.
The single biggest formula that affects your credit is this one: your percentage of your balance to your high credit limit. So if you have a credit card with a $1,000 credit limit and you owe $500, that's 50%. That will not give you as good a credit scores as if you have a balance of $300, for instance, and even better if you have a balance of $100. And that will maximize your credit score. And then you want to keep a running little balance. You never want to pay it off at the end of the month.
So yeah, and I think that brings another good point regarding credit, and it is that when people have collections in or judgments and they want to start the process of buying a home, people usually
Mhm.
just tend to just like, I'm gonna pay everything off, so I'm
Yeah.
ready. So please don't do that. There are accounts that you're probably not even gonna have to pay because they will hurt your credit instead of helping it. Why? Because unfortunately, the way the bureaus read it is that you're having activity in a negative account. So before you
You're talking about negative debts like
yeah,
collections.
yeah, collections and all that stuff. Yes,
Mhm.
that's what I say, collections or
Yeah.
judgments. So before you pay them off, just call us. We will be happy to review the
Mhm.
scenario with you and make sure to give
Yes.
you good advice or a plan of how you need to handle these bad accounts.
How much do you charge for that?
Nothing.
Nothing.
Okay, cool.
Yeah, the advice is free.
Okay, that's important.
Just call us with any questions. We don't charge anything for consultations and just giving
Mhm.
advice.
That's right.
Okay, the last question is what difference does it make to have a really high credit score?
A lot. A high credit score. So credit scores generally just help the investor determine how risky of a candidate you are for financing. So the lower your scores, the more risky you're seen. The higher your scores, the less risky. So the higher your score, we've already talked about one, for instance, you may need less money in the bank after closing, for instance. But really, credit scores are going to affect your interest rate. So the magic number for the best interest rate possible out there is a credit score of 740 or higher.
Yeah.
Of course, there's nuances to all of these things depending upon the type of property you're buying, how much money you're putting down, et cetera, et cetera. But just know that you really want to have your credit scores to be 700 or more to start getting into the really competitive interest rate range and to get maximum flexibility on your qualifying and to limit the amount of documentation you're going to need even. So all those things can be affected by a higher credit score.
Yeah. So I would like to give two final tips. Okay. So one of them is going to be when you have credit cards, put them in auto pay. Minimum payment, put it on auto pay, then you can make an extra payment for whatever you want, but at least that way you make sure you don't have any late. So every time you get a credit card, put it in auto pay. The other thing, never co-sign with anybody. Everybody wants to have, they go in with the best intention,
Good
help
advice.
me co-sign for a car. I have a good job, I can pay for it. And then unfortunately this person loses their job and they cannot make the payment anymore.
That's
and
right.
then there is a repossession that is a lot of money.
Correct.
So, it's better to say no at the beginning and that way you don't have to have issues later on. So, those are
All
two.
time.
Yeah. No.
Well, thank you guys.
Thank you very
Thank you
much,
for having
Jesse.
us.
Bye.
Bye. Call us.
Thank you, everybody. And if you have any other question, please send it to my email. Thank you. Bye.